Right, good morning Form 3. Sorry I'm not here to teach you today. Quite an important lesson today, and I need you to focus really hard. You can find this clip on our YouTube channel, on Marysville College YouTube channel, and if you have problems with the homework, you can refer to it. Just so that you know, a heads up, your homework is task 3.1, the whole exercise. Right, stop moaning, let's get cracking. So, what we're going to do is we're going to enter sales transactions into the cash receipts journal and then post them to the general ledger. So what we have to look at is what we already know. If we look at a cash receipts journal, you're quite familiar with this. However, this one is a little bit different. We've got the document number, we've seen that before, day, details, our analysis of receipts, which acts as a till. So every day the money goes into the till, and we only go to the bank once a day, and the way we indicate that is we underline it at the end of the day and only take one total amount to the bank. Right, then we have a sales column. This is the new column we haven't seen before. It uses the selling price of every single sale that takes place in the business. Next to it is what we call the cost of sales. The cost of sales column uses the cost price figure. Remember, this is the original price that the business bought the trading stock at. Then we're familiar with fee income. That's when we offer a service, and our details would be services rendered. If nothing fits into these columns, we go over to our sundry accounts, enter the amount, and then the name of the general ledger account. So let's have a look at the first transaction. Relatively simple. Receipt number 59. On the first, the owner, M. Ntini, deposited 50,000 Rand into our bank account for capital. The next transaction is the one that is new. So our source document is CRT, which stands for Cash Register Tape, or you can use CRR, which is Cash Register Roll. This transaction took place on the 3rd. We now write cash sales because we sold goods for cash. We received 7,200 Rand, so that goes into our till, into our analysis of receipts. Something else happened on this day, so we're not going to go to the bank straight away. This 7,200 Rand was for sales for the day. So in our sales column, we enter the 7,200. Now have a look at the cost of sales figure. It's less than the sales figure. Why? Because your cost price has to be less in order for you to make a profit. This business works on a 50% markup on the cost price. So if you're given the sales figure of 7,200 Rand and you need to calculate the cost of sales figure, this is how you would do it. Everyone, take your calculators. 7,200 Rand times 100 divided by 150 gives me 4,800. Why am I dividing by 150? Because the markup was 50%. Right, the next transaction is rent income. That's the second transaction on the day. Now we underline our analysis of receipts, add the two together and go to the bank with 8,400, and then we enter what the 1,200 Rand was for, rent income. The next couple of transactions you'll notice are familiar to you. However, on the 9th, CRT, Cash Register Tape, or you could do CRR, Cash Register Roll. 5,340 goes into my till. It was for cash sales, so it goes into my sales column. Now I need to calculate my cost of sales figure. So, pick up your calculators. Let's go. 5,340 times 100 divided by 150 gives me 3,560. Right, we had services rendered on that day too. That's the last transaction for the day. Underline it, put 7,540 into the bank, and the 2,200 was for fee income. We received money from a loan. There's another cash sale. Do a quick test. 6,420 times 100 divided by 150 gives you 4,280. Couple more transactions coming through. Interest income, and the last one, commission income. Right, now at the end of the month, what do? We tally up for the month. There you go. So my bank figure, what I received during this month was 90,550. I 18,960 for sales, 4,100 for fee income, and 67,490 for everything else. Remember to check. I'm going to say 90,550 must equal sales plus fee income plus the sundry accounts figure. Notice that I've left out the cost of sales because I didn't receive that amount. That's what it cost me to buy that trading stock. So just be careful of that now, a slight variation to what we used to do. So our accounting cycle tells us that at the end of the month, once we've entered all our journal entries, we need to post it to the general ledger. So let's think about this. We've received money. The money has gone into our bank. Bank is an asset. Which side do my assets increase? Debit or credit? Yep, that's it. On the debit side. So we're going to debit bank with 90,550 and we're going to credit the rest. So we're going to credit sales. There you go. We're going to credit fee income. There you go. And we're going to credit every single one of these. Okay. So the rule is debit bank, credit the rest. Okay. But cost of sales. He's a funny oak. Something's different here. Okay. Remember, this is the cost price. This is what it cost me. So we're going to debit cost of sales, okay? And cost of sales partner is trading stock. And I'm going to credit my trading stock because my trading stock is going down by 12,640. Take note, we've got all our folio numbers here. Remember, you must enter your folio numbers to indicate that you have posted everything to the general ledger. So let's have a look at the general ledger now. Right, there are our opening balances for every account. And there's my first entry, 31st, end of the month, sundry accounts, CRJ, 90,550. Why have I written sundry accounts? Well, here goes. Let's look back. I received money for a whole lot of things, for sales, for fee income, and for all of these things. So I can't now go and fit all of that into one little line. So instead of writing capital fee income sales, I write sundry accounts to indicate a number of different transactions. Right, so my rule was debit bank, credit the rest. So let's see. There, we're crediting capital. I want you to close your eyes for 2 seconds while I flick through. Okay, that one's fine. Credit loan. Close your eyes now. Don't want you to see that one yet. Keep your eyes closed. Don't want you to see that one yet. And I'm going to credit everything else. Watch as this happens. Okay, so I debited bank and I credited everything else because it was income, it was money that is making my profit go up. Right, now we haven't dealt with cost of sales. Right, so let's have a look here. I sold my trading stock. So my trading stock must go down. Trading stock is an asset. It increases on the debit side and decreases on the credit side. So I've got to show that I've lost some of my trading stock. It's gone out of my shop. So there's the entry. May the 31st, because it was at the end of the month, I totaled my cost of sales column with 12,640. So if I've credited trading stock, what do I need to do to my cost of sales? There you go. I have to debit it. Okay. The contra account is trading stock, 12,640. Remember, cost of sales is an expense. Okay, so we debit our expenses and we had credited all our incomes. So there you go. That's the end of my lesson to you. So you are now going to do task 3.1. I have put this up for you to have a look at, so you're welcome to go onto Moodle and see it. The cash payments journal is exactly the same as we've done in every other exercise. Post to the general ledger, do the trial balance, and good luck, and I'll see you soon.